changing landscape of the housing market in Las Vegas requires a real estate professional that understands how to get your offer accepted, willing to go above and beyond for service and accountability. Hi, my name is Dan French. I've been in the real estate and financing industry for over 13 years. Most real estate agents struggle with answering their phone. Please call me directly, 702-557-6176. I'm available for all your real estate needs.
Dan's a fantastic man. He really is.
Ladies and gentlemen, please welcome.
Hey, what's going on, everybody? This is Dan French. This is a French Workbench podcast on a Thursday. What do you think about that, Brett?
Thursday?
On a Thursday.
You mean almost a Friday?
Yeah, man. Is that Brett Jenny right there? What's going on,
The
Brett?
one and only certified crypto agent.
Oh, look at your big B you got there,
Metaverse
buddy.
certified agent.
Metaverse.
Other than that, yeah, you know, it's Thursday, Dan. How's your Thursday going, man?
Good, man. Everything is going amazing.
Yeah.
Got a great show today. We're going to talk a lot about financing cryptocurrency, right? We're going to talk a lot
Correct.
about that. We're going to talk
NFTs.
Mr. Rob Friesen. Let's go ahead and roll this down here. I want to bring over our guest here. Well, he's going to be a part of the show. So what's going on with you today, Rob? How are you, buddy?
Not too bad. Thanks for having me on.
Man, we appreciate you coming on. So what's going on in your world? So you do a lot of stocks, right? A lot of day trading, or what do you do?
Yeah, equities. I don't do options or commodities or futures, but just equities. And it's day to day, constantly running symbols every day. So not high frequency, but definitely high touch, meaning a lot of symbols.
Yeah, I think a lot of people, what they want, man, is they don't want to be bored, but they want the content. So we're gonna do our best to make it entertaining.
Isn't that life? I want the reward without the work.
You guys don't know. You guys don't know this channel. This is the most real behind the scenes information on financing, real estate, money talk, entrepreneurs going on in Las Vegas. And I'm your host, Dan French. And let's talk a little bit today about what's gonna cryptocurrency, right, Brett? So that's what you wanted to discuss. And Rob, I want you to bring your take in on this. So Brett always comes on the show, and he talks a lot about cryptocurrency, and he always has a lot of things to talk about with that. So Brett, let's talk about you, man. What's going on with crypto?
All right. Well, not so much crypto as I want to talk about an NFT project that I'm getting into and trying to become a part of. So this one's called Tykes NFT, which basically is short for digital tycoon, right?
Okay, so it's a tyke. What it like?
Tykes. Tykes.
Okay.
Tykes. As in digital tycoon, right?
All right, digital tycoon.
So the whole project is started by Ryan Pineda. I'm sure you've seen his commercials on TV. I want to buy your house.
So that's
So that he's the one that started, but he's huge into digital real estate as well. So more importantly, he started this community. And so basically the community, it's everything that I've been looking for in cryptocurrency and real estate and transacting the two together and combining the two. It's kind of the whole community that I've been looking for the past year or so. It's a bunch of like-minded people across the country who get together with real estate, NFTs, digital real estate, the whole 9 yards, everything. So, what kind of attracts me to it is that what comes down to this is you have Wall Street and you have the old money, which kind of ruled the day in real estate for the past 100 years. And so, the system's already in place that they're comfortable with. And to be honest with you, the system's designed for them. So with all these technologies that are happening with cryptocurrency and blockchain, I believe that's going to really change real estate as we know it forever. And that's kind of the goal of the community. So we're looking for artists. We're looking for creators, content writers.
So listen, man, you're recruiting people for a community that you just joined. Like, wouldn't that be Ryan's deal?
No, because the whole point of being in the community is to bring as many community people in as you can. So what I'm saying is this: it's not. He may be the creator of it, but he doesn't own it. Does that make sense?
So who owns it then? Who's the person?
Well, he's the creator of it, but no one's profiting off it yet.
Okay.
So he's starting an NFT and going to be the creator and owning behind the NFT, which is going to bring the immediate value behind that right now is offering basically courses for free. And what the immediate thing he's doing is he's got a house that he's bought. And you know how you have like timeshares?
Yeah.
You'll be able to do it through the NFT with a timeshare. So if you're part of the community, if you own the NFT, you'll get to stay there for free and all that other thing. So it's about building the community and building up the worth to the more that he joins in projects and joins in with other companies, and the bigger he gets, in a sense, the bigger the community does. But more specifically, if you're interested in digital real estate, virtual real estate, NFTs, and combining the two, this is basically the community that's being formed to be the central piece for all of those things.
Real quick, Rob, what do you think about this?
Well, I mean, there's certainly a place for it. The question that I always have is, you know, when we had a lot of money falling out of helicopters and, you know, zero interest rates, you know, speculation, you know, was pretty ripe. If, you know, if that's off the table, we got no more stimulus and rates are rising, you know, is there the support for all of this? Like we went from having a few NFTs to, no, there's, you know, hundreds of thousands coming on the market, and everybody's trying to slice and dice up this digital real estate. So I'm just questioning how much money is available to flow into these more speculative assets. It's
this world with digital real estate and NFTs and the Metaverse in the next 10 years is supposed to be up to a $10 trillion market. So it's very beginning right now. And I would have to say this is probably 98% of the projects that you see right now for NFTs are shit and will go to shit. Just like the .com. Absolutely agree with you on that. Absolutely agree with you on that. And I suggest anybody out there really get educated. I mean, you can go on YouTube. There's a lot of different things. And to me, I've been doing nothing but educating myself on NFTs and why ones are important and why other ones aren't for the past year. This community, if you've ever been in real estate in any shape or form, and you're interested in virtual real estate, in digital real estate, in tokenization of properties, and all these different things, this would be the community that I would say get into, because the guy who created it is known for doing a thing or two in real estate, right? I mean, he has like 8 different businesses, and they're all multi-million-dollar businesses.
And I think that's what consumers are looking for. Is somebody that's going to go ahead of them and vet some of this stuff, a trusted voice that, you know, can say, here, I've done a tremendous amount of research on this, and you know, here's the crap and here's the good.
And he's got the time. He's got the time and connections to be able to put the right people in place. You know, I look at it as anything. What's their track record of running a business? If they have a track record of every business that they've started has been successful, then I would have to say this guy probably has a good course about going about what he's doing. And that's kind of how I gauge it. But, you know, this community, like I said, you know, and this community is for people who are brand new in cryptocurrency and NFTs and have no idea. It's educational courses.
So one of the big questions is
this. Free.
One of the big questions is this: is if you have the money. Okay, we're talking about investing, financing, right? A lot of things. He was talking about, you know, do people have the extra money? Is this really a risky asset? Is this something you'd want to put your money into? Rob, is that something you're kind of, you know, insinuating that is this actually a good thing to do to in this market where people are currently at? Is it good to actually invest into crypto right now, or should you be sitting on the sidelines?
No, I mean, I'm not going to hold people back from investing in things that they feel have some upside. I guess, you know, at the end of the day, there's always these phases in our lives. We've seen, like he mentioned, the .com bubble and so on. And, you know, even back in beginning of 2021, we had the meme craze. But the stats are out that, you know, retail traders have lost billions of dollars collectively on chasing that stuff. And so the hard part is...
But you knew that was going to happen.
well, true. But like the hard part is for people to really go and find, you know, the trusted research, the trusted voices and stuff. And I like the fact that there's a community. And, you know, I've noticed you mentioned earlier when we were chatting privately about, you know, following CNBC, you know, and I've noticed some of the interviewers have kind of put the pressure on some of the talking heads to say, well, you said this last time and
agreed,
you know, and now you've changed your mind and blah. And you know what I'm saying is the accountability side of it.
Yep.
And so we need people to vet, to do homework, and sharing in a community, and then that accountability trail as well.
Absolutely.
So I want to bring somebody in real quick. Okay. So we have Mike Keeler here. He's a financial planner. Mike, how you doing today, buddy?
Oh, just living the American dream. Oh, look at me.
You look good.
There you go. Yeah, you fit right in that shadow, man.
Real
Perfectly.
good, man.
What's going on? Relaxed.
Yeah,
like a body chalk.
I know. Oh boy, I don't like.
You're
that
really
idea.
in the hot seat, Mike. You don't even know, brother.
Yes.
How's your life going, Mike? I mean, what have you been up to, buddy?
Just getting through life. We bought an RV in December, and
really?
Been having fun with that.
Yeah.
Where have you traveled with it so far? Any place far?
Nothing too far. We've been to Arizona, California.
Okay.
We're going to be heading back to Minnesota in June. Take that back there.
Yeah.
I think we got a trip to North Carolina planned in the fall. So
Minnesota, eh?
Minnesota. Don't you know?
Don't you know Minnesota, eh?
So, Mike, you're kind of chiming in. I know you can't. It's not that you can't, but you don't talk a lot about crypto because financial planning is what it's.
Well, so I've got a broker dealer, and they're not always. I'm not supposed to be talking about. The crypto to my clients.
You don't have clients that ask about it though?
I do. I have them all the time, and basically the answer I give, and oftentimes it's an 85-year-old woman who comes in and says,
I get it.
Unless you really understand this, it's not for you. And I just go back to Warren Buffett. He always said, invest in what you understand.
Yeah, I do agree with that.
And that makes total sense. I was in the software industry back during the dot-com implosion, and the company that I worked for, it imploded. I had all these stock options that all of a sudden became worthless.
Yeah.
But, and I saw just this huge craze, and I couldn't quite figure it out. I didn't understand it. And
you just saw it going, but you're it's not connecting.
I'm getting a paycheck from it.
It's almost like it was propped up.
You think? And it's just, anybody who had the word internet in their business plan got huge money from venture capitalists.
Gotcha.
Until all of a sudden the venture capitalists were broke. So, when I look at crypto, personally, I invest in it. I invest in it weekly. I'm a buy and hold person.
Yep.
I don't do day trading. If you're wanting to invest in an NFT or something like that, don't expect it to double in value and that you'll be able to flip it for a profit in a short period of time. So, you buy what you think is going to appreciate over long term. And I think that'll be a good
And the
spot.
ones that you bought, probably you feel have a good utility behind it. And
Certainly.
have a future like Ethereum. It's being used for smart, right? So that makes
Certainly.
sense. There's a business behind it in a sense.
There is, and I actually was doing a lot of mining of Ethereum. It's
kidding, man. Good for you.
It got crazy expensive.
Dude,
so
I know.
I've
That's the problem
down.
with Ethereum. Its scalability sucks because it was built 6-7 years ago.
Well, it wasn't built for.
It wasn't built for
this
the
big.
mass that it goes.
Let's get back to this community thing. So what is the community about? Like, why are you bringing this up, and why is this so important?
I'm bringing it up because if you've had any interest in, well, first of all, there's a community in there where they talk about regular real estate, where it comes.
But what is the community for, Brett? Like, why would I join a community? To learn what?
It's to learn as much as you can about different angles in real estate, how to make money in real estate, education in real estate, and now going into Web 3.0, into I should say Web 3, going into virtual land, NFTs, how that can all come into play, tokenization of properties. These are all things that are so new on the forefront. In fact, we call ourselves pioneers, right, with this, because we're so much on the forefront, and there's so much to be learned that it's like there's not a lot of people that are into this, let alone doing this. So why don't we all get together collectively?
So let's explain
and share these. It's to share our ideas.
Let's explain what all this means, though, because you're throwing a lot of jargon and technological words out.
How so?
Well, I think people don't know some of the things you're talking about,
like
right?
What?
So, Metaverse, right, or buying space, or certain things like that, right? Explain how somebody.
Here's the
gets
best
into
way I
something
can
like that.
explain it: is Web 1.0 was basically read-only format. It's like you could now read Time magazine online. You can now read the New York Times online, but that was it. That's all you could do. Web 2.0 is what we currently have,
Okay.
which is I can interact now with the internet, right? Instead of just reading Time Magazine online, I can go on and I can comment. I can create my own blog. I can create my own YouTube channel talking about it. I can interact with the internet. But the problem with that is when we went from Web 1.0 to Web 2.0, we went to basically taking something, and Web 2.0 is centralized, and it's all owned by a handful of companies. They control all the content. They control all the algorithms. They control basically your information. That's the problem with that. So what Web 3 does essentially is it takes all that information and all that content that's been out there, and now you own it. You own your own rights. You become your own avatar. So instead of posting information online and going to Instagram and I'm posting information on there and Instagram's making money because they're getting viewers that are going and they can charge sponsors,
right?
You, in a sense, are now worth what you're worth because you're taking the internet back.
So you're saying that through this NFT and this community,
correct?
This is how this is being
established. And let me give you an
established.
example. Like an NFT, one purpose it can be used is for like copyrights, right? So before in the past, it's like I write a song and I release it on YouTube. Well, YouTube, it gets a lot of views on YouTube, but I don't really make any money. YouTube does because they get a lot of views for it and they get more advertisers that pay for them, but you don't get anything. If you release it in an NFT, basically you can release it so that you own the copyrights, and every time that's out there.
So you're like your own business owner.
Yes, you're getting your own money. So
Right.
instead of a third party or a company getting paid the money, because the platform that you put it on, they're basically getting money for that in a sense through advertising or whatever it is. This is you taking back the ownership of all your content and being online. Anything online that's yours, you getting paid for, and you being the direct owner of it.
Rob, you got anything to say about it?
Oh, I definitely have some
Yeah,
things.
let's talk about it. Rob's over there ready to go, man.
Rob's trying to be calm.
Let me bring us back to Facebook, now called Meta. And
yeah, Meta. That's funny.
Do you remember when people started to, advertise and create, sort of venues on there, and then they discovered what all the contracts, all the language in the contracts, and how much Facebook actually, owned of what you did and what you were and who you are, and so that raised quite a bit of alarm. And so you have to do the same thing with these companies that are creating like a strip mall in the metaverse and selling you, a location and all that, or selling you an NFT, which is what that location would be, is an NFT. And you have to read the various ones. There's quite a difference between some of them. So I'm just recommending that you find out what the risks are associated to your supposed ownership of the metaverse. Okay.
I would say a good advice would be if you go to OpenSea or LooksRare or anything like that, these NFT marketplace, look for the projects that are blue chipped. Blue chip is like if you're on Instagram or Twitter, you're verified. You have to submit article. Basically, you are verified and verified to be able to do it. They've gone through their research on you. They've done their homework on you. So you're a verifiable person. If you look for those projects that are blue chipped, you're usually going to, that's a good direction, I would say. Still do your homework, but he's right. There's a million different ways that NFTs are being used right now. They're used from whether I'm a solo artist and I want to release my artist material and have copyrights.
Give me an example of one that's happened recently. Can you give me an example of somebody that's put an NFT out that you can put out in the news? Does anybody here know like something recent?
Sure. Well, I can give you an example. Do you know the band Kings of Leon?
Yeah.
They released their last album as an NFT. And so if you bought the NFT as the album, not only did you get the music, but on their end, they got all the rights to that music. They didn't have to give any of it to the record contract.
So how do they get paid? They have to go to how do they find the NFT?
Because it's sold in an NFT. So every time someone bought an NFT, just like every time someone go out and buy their record, they got paid for it. But in the NFT, they had extras in there, like tickets backstage, tickets to a show, to two of their shows throughout the country.
So somebody else
backstage
is controlling
meeting with them.
So somebody else was controlling that at one point, and now they're controlling all the ways of getting paid. How you would, like if you were going to do a concert, right?
Correct. It replaces the middleman.
This whole thing with smart contracts just is infinite potential.
Yes.
Infinite,
Yep.
and the ability to lock things at designated times or
Yep.
designated bonuses, mile markers, all kinds of things. So, if people want to understand it, it's, when you use DocuSign or Adobe and you sign a document digitally, it's encoded and so on.
Mm-hmm.
It's like that. It's a smart contract that has that verification plus the ability to unlock things all through the life of that.
You're basically
contract.
writing up what you want the contract to do, but you're writing it in computer code. But because it's in computer code, nobody can renege, nobody can bring in an attorney and try to change it, nobody can do anything because it's set in computer code. But you can write all the terms.
Right.
Go ahead. Yeah.
Unless the contract of the vendor is got some legalese in there that would prevent you no different than being blocked on Twitter or whatever.
Sure.
So you got to be really careful about what they actually say in there.
Yeah, I mean that's having someone verify what's in the smart contract, and that's not my department.
No, but it is on the platform. So if you have
correct.
So I'm just saying that's there when you go to purchase an NFT, you can see or list an NFT or something like that.
Yep. Future royalties and all that's another thing you can do too. So Kings of Leon have it so that every time that NFT gets resold to somebody else, they get a royalty out of it. I mean, you'll have these people who start these NFT projects and they'll sell the initial NFTs on it. But here's the thing, in the secondary market, every time that those NFTs get sold to somebody else, they get a percentage off it.
I see.
So they can become a millionaire 2 or 3 times over just with the secondary market.
So when I'm thinking of NFTs, I think of, some guy bought an NFT of the first tweet, but there's only one of those out there. You're talking about something where there's multiple copies of this NFT.
Well, it's unique in a sense that there's the computer code in it can be the same as it is. What you want the NFT to do can be the same in 10,000 different NFTs if you want to.
Okay.
It's
no different than having a Rembrandt and then having digital copies.
Correct.
Of it, right?
Yes,
Right.
correct. Yes.
Okay.
It's just the original is they're all verified on the blockchain as being the owner of it. In that case, that's where it comes into play, is that it's verified on the blockchain that you are the owner versus just taking a picture of it and saying, oh, wow, I own it too. You don't. The way I always compare it to, it's like a house, right? I could sit there and take a picture of a $5 million house in Zillow, and I could put it on the internet and say, this is my house. Do you guys love my house? This is a great house. This is what I come home to every night. I'm super successful. But when that actual physical house goes to sell, is the real owner going to get that money, or am I going to get that money?
Okay.
Same thing. That's the way I kind of look at it.
But I also see the advantage to the artist because if, I've got a huge record collection. If I started selling those off, the artists don't get that money,
Exactly.
and that's kind of cool that they can get a little.
So every time, so like think about someone like Picasso, if they would have had it back in the day when he was famous, when he was actually alive,
Yeah,
right?
every
think
time
about,
he sold one,
think about every
his
time
estate
that a dealer resold one of his to someone. Think about if he got a cut off of that every single time,
Yeah.
and you don't have to do anything; it automatically you get your cut before the next step can happen.
Okay.
So you don't have to bring in an attorney. You don't have to worry about someone reneging on the contract. You don't have to worry about any of that stuff. It's in computer code. So it's the ultimate artist rights.
So
is what I say.
the other thing that comes to mind, do you remember an app called Second Life back in the early 2000s?
Yes, for a second.
Okay.
No pun intended.
Yeah. So that was a virtual world, and they sold virtual real estate.
Yep.
And it was a very interesting experience, more of an experiment, I think.
Yeah.
So that's kind of interesting that we're seeing this type of stuff again.
There's a lot. It's so new, right? And I'll be the first to admit that even with virtual real estate, it's hard for me to comprehend and wrap my brain around what is valuable right now. I mean, I understand why some things are because they're located against to another store that sells a lot and all that stuff, but how to go about finding it, how to analyze it, all that stuff, I am new to that. That's something I definitely need to learn on more.
Well, I think this is a new territory, and a lot of people are going to be learning about this.
But that's why I'm in this Tykes, because that's what we're going to discuss. So there's 5 other people across the country that are into it like I am. None of us really have an answer yet or how to do it because it's not really being done too much yet. So let's learn together. Let's teach each other. Let's grow together. That's what this community is about.
Yeah.
Rob, what about you, man? What do you got anything to say about that?
No, it's good to learn. You have to educate. You have to stay up to date, and that's kind of why I got into GPU mining too. A number of years ago was to learn and you know what I mean. It's nice to have a utility rather than the speculation side of it.
Absolutely.
Right? Earn the coins. Right?
Yep.
So
Yep.
I converted. I converted a lot to Cardano because I like the fact that. They were more proof of stake orientated, and Ethereum was.
And Charles helped with the Ethereum, starting Ethereum too. So,
but Cardano hasn't performed near as well as some of the others. But
I have a few things to say about Cardano you probably wouldn't like, but
I at the time, and that's part of education process. At the time when you're looking around, you say this seems pretty good.
it does sound good.
I have the same reservations now, knowing a lot more about it. But anyway. There's some good projects coming up.
So let's keep moving because I want to talk a little bit more about things. So you got anything else with crypto?
No, man.
No.
I mean, I could talk forever, but let's move on, obviously.
Well, everybody's got an input on this because I think it's a big deal right now. Everybody knows that inflation is something that's really eye-popping, right? For everybody out there, that you see the cost of things going up, and everybody thinks it's going to, at some point, come down. And I want to talk with you about this, Rob, and you can talk also, Mike, about this situation. What do you guys think about this inflation? Do you feel like we're going to keep going? I would say we're at like close to 8, maybe 9% inflation, probably higher than that. What are your thoughts on that, Rob?
Well, first, the narrative on inflation is not always correct in terms of the causation or, what will happen or the long-term impacts. When they first started to say transitory, I remember when that first came out, I was on my show in May of 2021, and it said, I don't agree with that word transitory. But here's the thing, it's like, when you look at the economy, as long as inflation stays ahead of interest rates by a reasonable margin, it's kind of okay. Like the economy can handle it. It's when the interest rates really get bumped up, like what happened in 81, 82 when Volcker took a hard line against it. That's interest rates just had to be marked way up, and that put a stop to that.
So
inflation.
when you say marked, how much did they jump up? Like how quickly?
He put a stop to it real quick. I think we went. What did we go to? 15, 18%, 20%. I mean,
in how short of a time?
It was a year or two.
A very short time.
No kidding.
6 months.
Yeah.
It was crazy. It was crazy.
Well,
I remember my dad's mortgage. He had a real problem with refinancing around that same time, 81, 82. And so it was a real problem. So that's the thing, is that balance of inflation versus interest rates. And as long as our interest rates are being notched up reasonably slow and inflation stays ahead of that, the economy can actually do quite reasonable. And in fact, we could have a rally in the stock market from that, as well. So,
okay.
Mike, you got something to say about it?
So, yeah, I mean, there's a lot going on with inflation. We see a huge increase in the money supply. It's not an exact science. You can't just say, hey, this is the one thing that is creating the inflation. It's a number of different things out there. But inflation's real. The government may say it's 3%. Other people say it's 8%.
Yeah.
It all depends on, how it affects your wallet, what you're buying.
Good point.
And but what we'll see over time is an increase in interest rates. That's healthy. They've been unhealthily low for a long time, and I know it's great for you guys in the real estate market. But they're going to be bumping interest rates 1.25% this year, and we'll probably see that again next year too if things go to plan. Inflation's real, and we need to keep it in check here.
Do you guys think, though, that so we talked a lot about they're raising the Fed's fund rate 0.25 point half a point. People don't really know, but they're saying it's going to be raised. And I'll talk to you about this too, Rob, and Brett, you can bring it up. Is this going to turn into what's called stagflation? And I don't know if you guys know what that is, but I'm sure you do.
What is it?
So it's really when the economy slows or really starts to stop or slow down, right? And then inflation keeps going at a rapid pace. And then you also have where unemployment is high. I know we don't have a high unemployment, but the other two things are there, and it's kind of showing itself. What do you think about that, Rob?
Yeah, I mean, there's always a consensus and there's an alternative thinking, and I think we have to learn to practice that and say, what is the consensus? What is the alternative thinking? I think that there is some real risks and some real headwinds, but we can still climb that wall of worry, and the market, it's going to adjust. People are going to adjust. We could have a situation where we actually flip from inflation to deflation. Imagine this. Okay, so you're a widget maker, and you got problems with COVID and lockdowns and all that, and then you have the supply chain disruptions, and so the prices of your widgets go up, and there's not enough supply. But then you ramp up production, and a year or two down the road, you're able to flood the market with widgets. What's going to happen to the price of widgets?
Good point. We'll go down,
right? So we're in such an incredible time. I'll give you an example. One of the biggest trades of the last 20 years was the Russian ruble.
Yeah.
Okay. Now that is against the crowd. See, the market's job is to prove the most people wrong most of the time.
It does a good job of that.
It does a really good job.
I can tell you firsthand.
Yeah, well, people are thinking emotionally, and they do the exact wrong thing.
Yeah, okay.
So there's a lot of...
Why do you say that about the ruble?
Well, look what it did, right? I mean, that was completely... You would have said it's the...
You mean shorting it?
Long.
What's that? Longing it?
I'm not saying I took the trade. I'm just saying look at what the ruble did. I mean, it got decimated, and it came all the way back to where it was.
Mm-hmm.
Right? I mean, that's one of the biggest rallies we've seen of a currency in 20 years.
Yeah.
So, but think of what the narrative was. Think of what the sentiment was. Think of what the prospects. Think of what everyone was saying, and this just goes on day after day. There are some media outlets that are just not healthy for your financial health.
I do agree with that one.
This might be the opposite of that. This might be the best thing. I don't know. But there's some that are just not healthy, and there's so many smart people saying things that just don't necessarily work out.
Yeah.
Right. And I'm not saying that we have a grasp on everything. We don't. But the market does this. It factors in everything that it knows or can anticipate. That's why when a company reports great earnings and you go, how come it dropped?
Yeah, that's what I want to know.
Right? Mm-hmm. Well, because it was already factored in.
It was already priced in. That's what they mean.
So it factors in what it knows or can anticipate. It just doesn't like surprises. And that's where some of your best trades come from, is a massive surprise, and we go down like the Dickens, and we come back after the surprise is absorbed, and it's like this. Do you remember when the Horizon oil rig was on fire and it finally sank, right? Yeah. Mm-hmm. Well, bless his heart, Anderson Cooper was standing on the shore still talking about the oil rig being on fire, blah, 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 right? And those stocks, BP and Halliburton and Rig and all those offshore drilling, they came back before the story was finished.
Yeah, I knew they would, because that's what happens is something like that. Yeah,
almost.
Yeah, you're right. There's an oil spill with the ship, and everyone gets upset, and then the stock goes down, and then all of a sudden people realize that life goes on, and they rebuy them and goes back. You're exactly right. So
your job is going to be as a an investor, as a trader, is to do the really uncomfortable things. In running a trading room, I used to throw some high heels at a trader and say, "You need to put those shoes on."
You're in the wrong game, buddy. I love it.
That's funny.
That's a good idea, Dan.
Yeah, it is. Yeah. Mike, you got anything else to say about that, or what? As far as what he's talking about?
I agree. There's a lot of opportunities out there. I tend to build up some cash, and then when I see an opportunity, holy cow, I go in.
That's what it's about, is having the money when the opportunity presents itself instead of blowing your whole wad on something.
Yeah.
Well, let me say this.
Which is why you can't do the FOMO. You can't chase stuff.
Absolutely.
You can't pay premium and all the time.
Yep.
You have to wait.
Yeah.
You have to wait for those nuggets, those golden opportunities that come along.
Yeah, I'll give you an example. March of 20, when the market just tanked like 30%. I mean, I'm watching it go down, and I'm like, holy cow.
Really? That's all you said was holy cow? And I drank my milk.
Yeah, there we go. I mean, I saw it drop 5,000 points. I'm like, oh my gosh, I'm buying. And then it dropped more, and then it dropped more. And I kept buying.
Yeah.
And I didn't expect it to recover as quickly as it did, but holy cow, it put me in a good position.
Time to go on vacation.
Well, yeah, or buy an RV.
Buy an RV. There you go. Thank COVID.
Somebody's out there, right? And you guys want to find, okay, like the average person, because we talked about hedge fund investors. We always talk about these big investors. What about the person that just wants to invest their money into something that they can just store? Because the stock market is very lucrative. It could be, right? It can be, right? It's like almost like gambling a little bit, unless you know what you're really doing, right, Rob?
Well, I mean, there's certain stocks, like we could go back in time and say, every time we had a big stock market rout, you could have bought Caterpillar, a massive industrial, pays good dividends, things like that, and you would have been greatly rewarded. There are some things that you can, look at that just make sense. They pay dividends, this and that. And so, doing your homework ahead of time, you've heard the slogan before, opportunity or chance favors the prepared mind. Well, that's just be prepared. And set something aside so that you can have your play money when the time comes, so you can invest with something that obviously you could afford to, if it didn't work out, it wouldn't be a life changer, but if it does swing back, you do quite well, and you can probably, with that strategy, outperform most of the smart guys out there.
Let me ask you a question since we have you on. Teladoc this morning. Didn't that drop like 48%?
Yeah, so.
So do you think that's a good buy when it drops 48%?
No, just because something's on sale doesn't necessarily mean it's a good buy.
48% one day, though. It's not going to go up at all? Quick flip?
I don't know the future.
So what is it?
I could give you odds on it though after that kind of move.
What are the odds? What are the odds on this?
The problem with my database is that it looks at things that happen on a multi-sample basis,
on a macro level.
Price discovery, like one event. I'm not going to have a Sharpe ratio with one data point.
Okay.
So the thing is, you need a number of samples, and I don't like the price discovery area is kind of like,
I get it with that. Yeah.
The meme stocks. You're shooting in the dark.
Yep. You eventually are.
I would rather go into boring is beautiful. I know it's not beautiful for your show, but boring is beautiful in the market. And you look for things that might get a sympathy trade discounted along. Here's a perfect example. One day we come in the morning, and it was like there was a bombing in the London subway, and our market was opening down about 28 points below fair value or something, right? The S&P. And so what does the U.S. stock market have to do with a bombing in London subway, right? But it was a sympathy reaction.
Okay. So who gives the sympathy? But Rob, who
pick up all of your Dow stocks that you love, whatever. Pick up some of your tech stocks. What a great opportunity. Another one. When Dubai had a problem and Big Brother Abu Dhabi had to bail them out. We were down 40 points below fair value on that morning. It was a Good Friday. No, it was a Thanksgiving Friday. We closed on Thursday. It was Friday morning. and it was a half trading day. But we were 40 points below fair value, and it was because of a sovereign debt default problem with Dubai. These are great opportunities because they're not directly related to, a problem systemically with our market.
Gotcha.
Right? Those are the kind of things you want to watch for. Where is there a sympathy, a sentiment,
Gotcha.
a fear, but it's not systemic. It's not like there's no
A sentimental event that's happened. Yeah.
Yeah, there's a roar, there's a bark, but there's no teeth. Okay.
Okay, I gotcha.
Yeah, I remember one time Amazon didn't make its projected earnings,
Mm-hmm.
and it missed it by a few percent, but I'm thinking, well, hell, me alone, I think I'm supporting Amazon, so I bought some, and eventually it turned around and came back. Did I think that Amazon was a strong company in the long run? Yeah. So a short-term blip, it didn't faze me.
Are there any stocks that you've personally bought yourself with the view of buying long-term, and you said, "F this, I'm out of here. I'm just going to eventually sell it"? And if so, is it like 6 months, a year, 3 months? Like, what's your threshold?
There have been a few that I didn't, that didn't turn out, but then there have been some that have been done that did really well.
They did exceptionally.
I put like $5,000 into AMD in my Roth IRA, and it turned into $85,000.
Yeah.
Well, that didn't suck.
Yeah. No, but I mean the ones that don't turn out. What's your threshold or determination? Or you just say,
I'm in it for the long term.
Sure,
and as long as the account value is going up over time, I know there's always going to be losers. There's going to be stinkers. You can't pick every single.
But
winner.
what's your determination for that? Like, what criteria does it need to hit or threshold it needs to hit before you're like, or is it just a gut feeling? Like, I just don't want this thing anymore.
Sometimes it's, I want to buy this and I need some money. So I will.
I've been there, dude.
Yeah. and so you do sell the stinkers sometimes.
Yeah.
There's no set pattern for me to when I sell the stinkers.
Okay. What about you?
Yeah, Rob, is there like real money that people can, like, because people want to invest, they want to know. What I'm trying to get at is give some knowledge to the average the person out there that's maybe thinking, I don't have hundreds of thousands of dollars in the bank. Maybe I got 15, 20, 30, whatever it is, or maybe I got 5. Should they invest in a stock market when they have money like that? You know what I mean?
Well, you have to separate earnings from winnings. So it's more, are you interested in the production side of the markets?
Okay.
Like, do you want to reach in and, take your mana out of the market or something each day? Do you want to be a producer? Do you want to correct inefficiencies and harvest the noise or
Gotcha.
Go after the signals? Do you want to earn money from the market? So it's a different perspective, investing versus trading. And the more volatile things are, the more it benefits traders. And 2008 was a remarkable year because of the volatility, and we've seen a return of that kind of elevated volatility again. And so the production side of the business is quite rewarding.
Mm-hmm. What about, so let's kind of move on to, we talk a lot about stocks. I want to ask about one stock here, which is Netflix, right? Brett kind of brought something up that relates to that question of, okay, when a stock goes down, everybody should jump in and buy, where I feel like everybody retracts, right? A lot of Warren Buffett says when people are fear, then you go in and you buy when people are fearful, right? So is that something?
It's like this. Let's go to charts, for example, right? So when I don't look at charts hardly at all unless I'm talking to somebody and want to show them something. But for production every day, I don't look at charts. Now, if you did see a pattern in a chart, you should probably ask the question, what is the fundamental reason that this pattern exists? Try to find out what the substance is. So if Netflix is down, try to figure out, not just from a chart perspective that it's down, but what's the reason? What's the substance of it? And we already saw a flash of warning signs with the reopening economy. So you have the stay home stocks, you have the reopening stocks. And so we already saw this going back already into July and August of last year and into the fall. We saw these baskets of stay home or reopening. And sure, we could have times in the future where, things go back to, stay home more, whatever. It could be some new pandemic or whatever. So you have to always keep that in mind because it can happen again. But here's the thing. Many of the gains that were in these stocks are being erased.
Oh, yeah.
And I wonder sometimes if all of the stimulus money and all of the zero interest rates for so long, if all of that bubble that was formed is going to be erased just because we are post that now. And we saw that in 2000 into 2001. So that's one of the things that I allow to be in my perspective. We could do that. On the other hand, we could also be in the roaring 20s. We can have, a fabulous stock market. I allow for both outcomes. It's hard to, you understand something about volatility. When volatility increases, investors' time frames get shorter, right? You have to be more nimble, right? Mm-hmm. Or you're going to have to take money that you can afford to lose and sock it away and not think about it for 10 or 20 years. And you asked me about, say, Cathie Wood stuff. Some of those stocks are in that category of they're going to take a long time. Earnings projections were, 2024 to 2035 on some.
Dude, I know, but man, some of hers have gone down 70%.
Well, and there's plenty of stocks that are 50% off their highs. Right?
Like, at what point are you going to sell it, though? You're going to write it down to 50? Like, that's something where it's like, I understand holding long term, but to me, it's like ride something down 50%. What the hell's the point of that?
Yeah, but I mean, we've based a lot of the value of the S&P on PE multiples over historically. Mm-hmm. And so if a company has no E with the P, okay.
Good point.
What is it actually worth?
Yeah. Divide by zero error.
Divide by zero error.
Yeah.
It's the argument on the crypto side too,
Yeah, no, I get it.
Value, right?
I get it, man. Yeah.
All right, so let's keep going. I want to talk one last topic here before we end the show, but I want to talk about what's going on with the oil prices and what you guys' thoughts on it. Is it going to keep going? Because look, I was reading something that it could be $8 a barrel projected, could keep going up even from now into September, maybe even October. What do you guys think is going to happen with this whole thing with the oil and gas prices and stuff like that?
Well, I had a target initially, kind of when the troops were being assembled along the Ukraine border. I was looking at oil at hitting, about 146 a barrel. It got to 140 just briefly and pulled all the way back. So I kind of got close to my target, and I was surprised a little bit at how much it pulled back. But I think that we're in one of those situations where, again, you have to allow for, on the one hand, and on the other hand, so the tension is the China economy, the lockdowns, and all that, and the supply chain disruption against the production limitations, the demand increasing as the reopening economy and stuff like that. So you've really got this tension, the war, and whether the sanctions are going to be effective in this category, whether there's willingness to really sanction in this area. And some of the sanctions are not immediate, they're down the road a little bit too. Mm-hmm. So you have to put that into perspective. So we're really on the fence. Oil could easily go down to because the last time it hit 150 a barrel in 2008 or whatever, it went all the way down after that to about 36 a barrel, right? So it I mean, literally from I think August or September all the way into January, that's how much it fell. So it was quite a crash. So the same thing could happen again. Or we could go up towards 185 a barrel.
So
it's really that tension.
Volatile.
What are factors that come into play? Because the normal person like me looks at that and says, "Oh, the world just didn't stop making oil, or we just didn't start producing more oil." why all of a sudden is it such a drastic, you know what I mean? Like oil is constantly produced. It's not like we're going to run out or we're going to.
No, I know, but
what
there's
are
a
the
tension.
major? Go ahead. Sorry.
There's a tension between paper and physical. Okay, and this is happening in the gold space too. The tension. So normally, like gold, trades with contango, and it's currently in slight backwardation. The same thing with oil; it's in backwardation. So that should put a positive pressure on the price of oil. And we remember in April of 2020 when oil went negative on the futures contract.
Yeah, I remember that.
Yeah, that was
Right?
scary.
I was like, dude,
So-
they're paying.
That's because of
That
the
was super-
contango. That was the contango problem. Now we've got the opposite. We're in backwardation. And again, this may not be topics for the show, but it just shows that there's a difference between the paper and the physical, right? It's like the futures versus the actual stocks or the actual
Gotcha.
S&P 500, right?
Yeah, I mean, how could oil be worth negative dollars? I mean,
Yeah,
that made absolutely no sense. But as you're right, on paper, that's what it was. But the oil itself still had intrinsic value.
Yeah.
So
Right.
yeah,
And the same thing now. So I guess the question is, can the producers, accommodate the demand? And if so, then things can stay in check. And if the demand, increases, so I guess in a lot of sense, economics 101, supply and demand is behind a lot of things in terms of ultimately the pricing. And that's why I think that we could have a situation where we go, we stay elevated inflation for a while, and then all of a sudden we have a dramatic, which would be not what the market's expecting, a dramatic shift, and suddenly we start plummeting prices and we go into deflationary, right?
Well, you know what I know about you two is you have a plan in place either way,
Well,
don't you?
yeah,
I know you do, because that's what smart people do.
you plan for
Well,
good
that's what
times
you
and you
do.
plan
Yes,
for bad times.
and you plan for what you're going to do, and you trade
Yeah.
a lot of relationships. So,
Okay.
would I like to take a naked bet on Chevron going from where it is now to, doubling or tripling? No, I'd rather trade ConocoPhillips against Chevron or
Gotcha.
Chevron against its ETF or, here's an example of a trade that's been going on for a while over the last couple of years, not as much anymore. But it was shorting Apple and buying all of the other small stuff that had the potential to become an Apple, right?
Yeah.
Okay, so think about that. You have a hedge in place on something that is very limited in its upside, and you buy all the things that have greater potential.
They have nothing to lose on the other side, basically.
Right. So you're
Yeah.
hedged. You're hedged.
Gotcha.
And so if the market melts down, you've got your hedges in place. And so that's what I recommend is hedge-based trading.
Gotcha.
I'm putting out a list of sort of top 10 S&P 500 by a statistical perspective, the odds
Okay.
that they'll perform. And so for example, today from open to close, our list produced. Let me pull it up here for a sec. So we had alpha over the SPY of about 0.485% return on capital. So the SPY performance, which is the S&P 500 ETF, our 10 stocks beat that by 0.045. So that'd be like, you'd make $48 per 10,000, right? So it's not a huge amount, but the point is,
You didn't lose.
You can do that hedged. If you were completely
Gotcha.
hedged and sort of market neutral, you still would have performed at about 0.32% return on capital. And if you were naked and you just bought the 10 stocks, today obviously was a good day, you'd be at 1.825% return on capital. So way above, what the other markets did. So we're producing this list so people can do it every single day if they want to go in and have ideas, because that's what they've been asking me for. Instead of like learning so much about how to use all the tools to get stuff, can you provide some ideas?
Gotcha. So how we get a hold of that, Dan?
You can go to mystockodds.com.
Okay. My stock odds.
my stock odds, like stock odds.
Gotcha.
Like
Okay.
Yeah.
Stock odds with an S, .com, and you can sign up for the top 10 list. And we're going to be producing a whole pile of lists like seasonality, divergence, the best sort of price discovery, the best companies in the S&P 500, as well as the NASDAQ 100 and the Russell 2000, which are all your small caps.
What you do right now, you could be an NFT community. I'm serious. That's essentially the same thing.
Mike, you got anything to say to that, or do you have anything else to say about it, or not really?
I mean, that's great for the short term. I'm more of a buy and hold type of person.
So talk to us about that side of it for you.
I'm still bullish on the economy. The economists that I follow believe it. January to December will be up 10%. So things are going. They should go well in the economy. Commodities are a good hedge against inflation. I think that's a good play right now.
Long term.
Well, here's one thing about the dollar. The dollar is so strong. The U.S. dollar is so strong relative to the commodity-based countries' currencies.
Mm-hmm.
So normally when the dollar's strong, people are short metals. So think about when the dollar pulls back. There's a further argument for your commodity side. As the dollar would pull back and decline, commodity prices should rise again, right?
Yeah.
So if you see the dollar topping off and starting to change, because they've got the Japanese yen dollar carry trade going on and all kinds of stuff. But if you see the dollar roll back, you'll probably get a good lift in your commodities.
The other thing is with Russia and Ukraine generating about 10% of the world's wheat and metals. There's
they do?
Yep.
Wow.
So that leads the United States and other countries to pick it up, and so
Gotcha.
that's good for
That's a good point.
business. We're
Of course,
obviously taking
yeah.
advantage of a sucky situation, but
Well, life goes on, man. I mean,
well, we need to keep this stuff
Yeah.
going. People still need to eat.
that's what I mean.
and,
Life still
yeah.
goes on for everyone else,
Yeah.
unfortunately.
So it takes advantage of that.
All right, so you guys, do we have anything else to talk about here today? I think we talked about a lot about it.
We're ready,
the
we're
NFL
ready for
draft.
dinner.
We're ready for dinner. I mean, Rob, I want to say thanks for coming on, man. We're going to end the show here in a second, but first off, how can somebody get a hold of you? And we want you back on. Obviously, you're going to come on if you can every week and promote your business. Maybe come up with something every single week as far as what you're seeing. How does somebody find you?
Just go to mystockodds.com and if you want to email me, it's rob@mystockodds.com.
Cool.
Brett, you got anything to say, man? No?
Vegas Crypto Agent at Instagram.
There you go.
The Vegas Dude at YouTube.
You got to buy the domain.
Other than that, join Tykes. What's that?
You got to buy the internet domain, vegascryptoagent.com.
I do.
Oh, okay.
Yeah, I have like 50 of them.
Yeah, I do.
He's got 50.
I've been buying them for the past 2 years of all crypto things.
Yeah. Oh,
I do.
I've got best financial advisor in the universe.com.
Really? Yeah. I got Vegas Crypto Agent. VegasCryptoAgent.com. I actually have a website with some of my videos on it.
You know
but
what?
it's
You know
not
what's
to the
sad about
standard
that
I
though
want
is when
to.
you got to go renew it, you're probably paying like $300 or $400 a
No, I'm
year.
not. I just got to renew it every year.
$12, something like
Yeah.
that.
Yeah, but if you got 50 of them, right?
Dude, I bought.
Yeah.
Think
about
about this.
it.
I bought VegasCryptoAgent.com for $1 like a year ago. That's can't even tell
There
you
you
how
go.
important.
Mike,
that's
I want to
gonna
say
be.
this though. So your financial planning. Talk about your
Yep.
website and how somebody can get a hold of you if they needed some help.
peakfinancialsolutions.com. You can sign up for an appointment right on my website. It's amazing. Technology is incredible. Holy
Put
cow.
that on
And I
blockchain, Mike.
still have the chalk line behind me.
Right?
There you go.
Pretty scary.
All right, guys. So we're going to be back here next week. This is our first test pilot run here today on a Thursday. We're going to be every week now, starting at 4 o'clock. See how that works out for everybody. But we're going to talk about financing, real estate, money talk, entrepreneurs,
Crypto.
That's the channel.
NFTs.
Cryptos, everything. So, guys, please tune in next week. We'll see you guys then. Thank you for watching the French Workbench podcast. You can find us here every Tuesday at 6 p.m. and Saturday mornings at 10 a.m. to find out all the information on real estate and financing here in Las Vegas. Also, check us out on our LV Home Professionals website. You can find your future home there, a lot of good information, and you can find us on audio-only options through SoundCloud and iTunes.